All right, so hourly chart. Obviously, we are looking at a swing low here to swing high, getting our range. Here's equilibrium. So the market did, in fact, drop down into a discount and a fair value gap. So we have a market that is in what? An oversold condition. Do we need an indicator to plot that or determine that? Nope, absolutely not. The rectangle is there just to draw special attention for you, the viewer. The fib is just to highlight exactly where equilibrium is. Anything above that level would be considered premium. Anything below it, discount. So we've moved from this high down into a fair value gap and below equilibrium, so we're in a discount. All right, here's the 5-minute chart. And notice that we had this run up in here. I mentioned in Twitter, and again, my Twitter feed is not a signal service, so that way we understand one another. But I was highlighting the idea that this was likely to go higher, and it needed to go for a premium relative to this high and that low. So we moved up into a premium, and then we slid aggressively, taking out relative equal lows. So below this low here, and here is what? Sell side liquidity. It was quick to do that right at the opening at 9:30. Short little bounce, then one more time below the low here, taking out sell side. For anyone that wanted to capture a long here, they knocked them out. Then we had a shift in market structure, and then rolled up even higher, rebalancing all of this. Drop back down into an area here where we have a 5-minute fair value gap. Trades down into it. I mentioned on Twitter that we would likely trade higher and take out the short-term high here. And here. So I mentioned the morning high, that's this here. That was going to be the draw on liquidity, and we saw that run here, and actually went a little bit higher than I thought it would for the morning. Ultimately up into a fair value gap here for a really, really deep premium from low to high. Trade up into that and then pull back inside the range between this low and the high. So on a 1-minute chart, we're zoomed in here, and you can see the morning I did a small trade here. I recorded this and did a small little vignette, shared it on Twitter. Took the partials here at the time of posting the tweet, and then the limit order getting hit here. Then, the only other trade I had today was waiting for it to drop down into a discount. And when it did, I went long here. Had a little bit of heat here, not much. It was like 5 handles, so bearable. Stop loss was just below the swing low over here. So, did it hit it? No. Did it look like it was going to? I don't know. I wasn't looking at the chart at the moment it happened. The trade here, I don't care. But it ended up coming back up, and I mentioned that we would run this high right here because we've taken out the sell stops here after running higher. So we had a shift in market structure back here earlier, and then we basically consolidated and dropped down to take out the sell stops. So anyone that was lucky enough to go long here and rode it up to here, the algorithm drops back down, clears the board, taking out the sell stops below here. I'm buying those sell stops. Had a little bit of heat here. We rallied, and I mentioned that we would start going higher now because we've cleared out the sell stops. And going over into the 1-minute chart with a little bit more detail. Here's the initial drop. Now here's what I want to bring to your attention. We had a short-term little shift in market structure here, and I know some of you see this and then you see this one here. Which one's the shift in market structure? Well, I'm playing the run up here to a premium, like I was mentioning on my Twitter feed this morning. So if this is a range I'm working within, the shift in market structure occurs here when it takes out that high. Drops down into a fair value gap, which is what I bought. I didn't believe we were going to take out the lows here because we should have done it at 8:30 news. It didn't do it. So this is a deep retracement and then sent it higher to go into a premium right before 9:30 a.m. And then they sank it down. Notice there's no model entry here. That's telling. Okay, it's tipping its hand to you. Because there's no real setup and it's a rush to get down here, it's clearing out sell side liquidity, going down, rallying, suckering in longs, trying to pick the bottom, knocking those individuals out. Now they are not allowed to be long. Their stops taken. Nobody in retail usually will take a re-entry after something like that. They're afraid. It rallies up, comes down to a fair value gap, shift in market structure here, rallies, relative equal highs, drops back down in, fair value gap, order block, rallies once more, goes into the imbalance here, consolidates, bumps up just above the short-term high here, then drops one more time, clearing the liquidity out here,